Hi, everybody. Welcome again to J2 Studios. I'm Johanson, and I'm really excited today. I've got a special guest with me, Duncan Kirk from Hub International Insurance. Duncan is an insurance specialist, and I'll let him describe what that is, but specifically providing counsel and guidance to our condo boards and condo homeowners. And so today, this show is going to be about condominium insurance, structure policies, master policies, whatever you want to call it, and kind of the five things, or I'll let Duncan drive that, but the things he wishes every board knew or would know about just their insurance policy. So, Duncan, thank you for coming in today.
Appreciate the opportunity.
Absolutely. So, tell us a little bit about who you are and what you do and how long you've been in the business, and maybe something a little secret about Duncan that nobody else
Well,
knows.
first thing the owners that are listening will appreciate is that I'm obviously a foreigner. Started my insurance career in Lloyd's of London,
Okay.
and had the opportunity to move over here in 1980, again on the insurance field, and got onto the agency side in 1994. So basically, one career person. In 1994, moved my emphasis to real estate and focused on community associations. And at Hub International now, I head up a division of our firm called Condos, where we specialize in providing insurance and risk management for community associations.
Perfect. So you've been around condos for a long
Being
time.
around
You've
condos,
seen it.
yes, I own two condos.
You even own two.
I have
Okay.
one in California and one in Washington.
Okay.
I serve as president of my association, so I kind of live and breathe
So-
the industry.
You are why I asked you to be on the show. President
Right.
of a board and insurance guy, plus two condos.
Oh yes,
Wow.
and
Okay.
our firm, we handle well north of 500 community associations, so we're well entrenched in that industry.
Fantastic. Great. Well, no, you can't get away without telling us something personal about you. What do you like to do?
Oh, I love to travel. I have an airplane, and it's going to be 50 years old in August, and people are astounded because it's painted with a Union Jack on the tail.
No.
So, I'm still waving the flag, and so I'm an avid traveler, avid photographer.
Yeah.
Everything from wildlife to aircraft to I even do a little bit of building photography to help people out.
Neat.
So, yeah,
Neat.
keeps me busy.
Yeah, absolutely. Well, tell us the first thing. What's the difference in your mind between, or just just for an explanation of, in the insurance 101, what's the difference between the condo master policy and the inside homeowners policy? And I know that's a pretty big topic, but for instance, what is covered under one policy? We were talking a little bit earlier before show about if there's a tie, if both things have coverage. Tell us a little bit about, just break down a master policy.
Yeah, it's
for us.
very interesting. Having been in the insurance industry, typically you're a business person. There is nothing that dictates what insurance you're required to buy.
There's a few laws, but yeah.
Right, but I mean, you don't have to buy building insurance. You
Right.
could self-insure. A liability, you're
Right.
free to choose whatever.
Right.
What many boards and homeowners do not appreciate is that all associations are governed by a declaration. We're talking about condominiums now.
Gotcha.
There's a condominium declaration, and that condominium declaration has specific insurance requirements in it.
Okay.
And the insurance requirements, they do vary by state statute.
Mhm.
But we're obviously in Washington. There are statutes, and then the declaration clearly determines what insurance is required. And that is so key because it not only drives what the association's responsibility is, it also has a section called owner's insurance requirements.
Oh, okay. So it
So
breaks it down.
we often see a gap there. Unfortunately, who writes the declaration in the first place?
The developer's attorney.
Exactly.
Right.
The developer's attorneys writing a document in a vacuum, and the building hasn't been built yet.
Okay.
They're writing it kind of oblivious to the fallout of what the insurance section says. So we often find that they're written rather ambiguous, which starts us down a slippery slope.
So, I'd say they're also written developer friendly. So they're
That's true.
and is there? Do you see an insurance? We'll see that in voting percentages and things like that. Do you see that in insurance coverage? Is the developer still on the hook after it's been built? I guess he's in charge of the board until it's turned over.
Yes, the owner obviously owns all the units until such times as
Got
they're
it.
sold. It gets a little bit more tricky, and we don't want to get off topic here,
Right.
but if there's commercial units and they
Right.
are going to retain the commercial units, so
Right.
obviously they have a different interest there.
Okay.
So we've got this document
Mhm.
that we hope is written clearly,
Right.
and in 99% of the time in Washington State,
Mm-hmm.
unit interior equipment, fixtures, betterments, and improvements are covered under the master policy.
So let me pause for a second. Break that down. Is that something screwed to the wall? Is that real property under real property?
Yes,
Or is it appliances too?
Yes,
Or is it,
it's
okay.
real property, and it does include appliances. Appliances is a little tricky.
Right.
Is a little tricky
Okay.
because is that equipment or fixture?
Right.
You tell me.
Right.
Why is this important? And this is where I would say to any board member or homeowner out
Right.
there, the typical insurance policy says we will pay whatever your declaration requires to pay, regardless of ownership, for property inside a unit, fixtures, equipment, betterments, and improvements, and then it has a separate section that says, and or appliances such as those used for cooking, refrigerating, and things of that nature.
Okay.
So the fact there's there and there, in my opinion, would suggest that appliances are not considered part of fixtures and equipment.
And that they would be covered under the master policy if there's a loss in that.
They would, but that's one of the grey areas. If we're working with a client to amend a declaration,
Okay.
we're saying, why don't we just have it follow the insurance language so
Okay.
that there is no grey area about what would be
Gotcha.
covered.
And I want to come back to a word you said. You said that a lot of policies say we'll cover what the declaration requires us to cover versus what the policy says it will cover. So what if there's a difference between those two?
The insurance policy for the association says that we'll pay for,
Whatever
obviously,
the declaration requires us to
yes, we'll cover the common areas,
Wow.
the limited common areas, which are obviously the building itself.
Right.
But when it comes to units, it specifically has a section saying we will pay subject to whatever the declaration requires to pay the
Wow.
following regardless of ownership. And the reason that ownership comes into play is because, as we know, with older associations, a unit owner would upgrade the unit.
Right.
You know, they put new cabinets
New
in.
cabinets, countertops.
Yes, new countertops, new kitchens. Is that covered by the master policy or is it not? And so that's the reason that A, they've got the regardless of ownership, and secondly, that's why your typical declaration will have a provision in it that unit owners have to report upgrades.
This is fantastic. I'm learning something in this because in our world of restoration, if there is a water damage or fire or a collapse claim, it's my pre-interview. It was my thought that it was, we use a term called from the paint in, and so the paint on the wall and the drywall and then the studs and the insulation and things like that all the way to the outside of the building is the master policy. But you're saying if a kitchen cabinet is screwed to that wall and there's a tile backsplash, tile and cabinets and granite
Yes.
countertops, that's all under the master policy. That's good to know.
There are, excuse me, there are three types of condo policies.
Okay.
There's the one that you're describing, which is called bare walls.
Bare walls.
Paint in is the unit owner's responsibility. We do not see this in Washington State. States such as Florida have a statute that mandates that in condominiums will only cover to the paint.
Okay, so
Out-
that's that state
yes,
statute you got to be
yes.
aware of. Okay.
So, and that's following all their hurricane losses, and
Gotcha.
they decided to go a different direction. Then we have what's called single entity coverage. This is one that I certainly wouldn't recommend. Single entity says we will cover as built. So your typical association would have, maybe an older one would have Formica counters, the original
shag carpeting.
Well, if it's installed.
Right.
And so anything that is subsequently upgraded would be covered by the unit owner.
That is a huge notification piece. So what's that called?
It's called single entity.
Single entity, okay.
And it's...
And you're saying watch out for that.
If you think about it, if I'm an owner and I'm moving into a 1980 condominium association, I have no idea what was originally there.
And you're going to update. You're going to remodel.
Right, and I'm going to remodel, so I don't know what the difference is. So what happens in the event of a loss, Jens, is that an adjuster would come out and saying, well, there was originally a Formica counter and now there's a granite counter. We're going to pay the difference between the two and the association pays the other one.
Gotcha.
You can see where that becomes very
tough.
Complicated.
So
we don't see it very often here.
Okay.
There are some states that have statutes that's the way it's written.
Okay. And so what's the third one?
The third one is in my opinion, the preferred one, which is all in. All in covers all fixtures, equipment, betterments and improvements, including those installed by the unit owner. Yesterday I was at an association and they were just saying that, well, this is ridiculous. We have penthouses with expensive upgrades, and we have ones that are as originally built. Why should the people on the lower floor subsidize those on the upper floor?
Good question.
Here's the benefit to the association. If we're insuring everything, excluding people's personal property, is the association now is responsible to repair the damage.
Okay.
So we had multiple units damaged. We've got one general contractor coming in. It's going to take care of all the units.
Right.
All units are restored to the same level they were prior to the loss.
Gotcha.
Which means that there's no diminution of market value because some people don't have personal insurance.
Right.
So you've got all of that situation going on. So
instead of multiple contractors on one lot,
each unit owner fixing their unit, some of them not having insurance and deciding to reduce the value of their unit by putting lesser expensive fixtures
worse, walk away from the loss and leave that foreclosure for the rest of the people to deal with.
And particularly here in the Northwest, as you'd appreciate, many associations carry earthquake coverage, and earthquake coverage follows the same language for all-in coverage.
Okay.
So that's a benefit to a lot of unit owners.
Very important. So first thing, look at your declarations, see what it covers. Second thing, read your policy, and I'm assuming the all-in provision is probably more expensive than the lesser coverage pieces.
Well, it's only more expensive because of the value proposition.
Okay.
The association's required to insure to 100% value.
Okay.
That's actually written into the declaration, which is one of the first things that we ask customers. How did you determine the value? When we see a frame building is at $40 a square foot,
Gotcha.
You know as well as I do that's slightly off.
Okay.
The piece that unit owners and board members wrestle with is that, well, the unit owner needs some skin in the game. They're the ones that 95% of losses emanate from units.
Oh, okay.
Their owner negligence. They didn't maintain something. The hot water tank leaked because it's 15 years old.
Gotcha.
They keep wrenching the refrigerator out, and the ice maker line is broken. So the typical situation, and it's written into new declarations, is that the unit owner is held responsible for the association's deductible.
Okay. What do those typically range from? You see those? Is
Typically,
there standard or is
yeah, typically $10,000.
Okay.
On larger associations, particularly high rises, where, as we know, water goes down.
Right.
Multiple units get damaged. You're seeing $25,000 water damage deductibles.
Okay.
We've seen deductibles where it's been $25,000 per unit with maybe an aggregate amount of $50,000.
Okay.
But those would be the in the minority.
Okay. So getting to most homeowners have homeowners policies. So the difference in coverage between the two, and using your last example of a flood. So the flood comes down, ruins the walls and cabinets, that would be covered under the master policy.
Right.
But it ruined the couch and chairs and artwork that the homeowner has in there, and the homeowner may be responsible for the association's deductible. So the homeowner's policy pays for the couch,
Correct.
and what happens, what's that coverage for the deductible, just in case I cause something, coverage called?
That is coverage A, dwelling coverage under the homeowner's policy,
Okay.
which is typically an HO6 policy for
Okay.
an owner occupant.
Okay.
An HO6 policy, coverage A, is called dwelling coverage, covers fixtures, equipment, tenants, improvements and betterments within the unit. So
Okay.
it's basically the same thing that is covered by the association. Key component here,
Mm-hmm.
and you and I have chatted offline, is that in the event of duplicate coverage,
Right.
the master policy is primary. So if there's a $20,000 claim inside a unit, just a single unit, affecting improvements and betterments, and the master association's deductible is $10,000, the claim is filed under the master policy, and if there is language to transfer the deductible to the unit owner would be reimbursing the association for, let's say, $10,000 or whatever the deductible is.
Gotcha.
And that would typically be covered under coverage A, but it's very key that the homeowner make their insurance carrier aware of this requirement,
Right.
because it's a legal transfer.
Right. And that's something. So in our settings, we'll often see somebody else interpreting policy coverage, whether that's two homeowners or a homeowner and a board arguing about who should pay for what, or a manager arguing about it, or somebody's insurance agent and somebody else doesn't have one. Who should be really reviewing this? And does every policy come with a Duncan, or is that a
That's a very good point. Really, everything falls back on the board.
Okay.
It's part of the declaration requirement.
Okay.
That's why it amazes me, and it's a shame in our industry, and obviously, like yourself, I mean, we consider ourselves professionals, is that a board of directors often doesn't even want an insurance agent to come to their meeting to explain what coverage they have. They would rather just defer to their management company, who may or may not give them the correct information. So responsibility is on the board. We would always encourage the board to invite their insurance agent in to explain how the coverage works.
Gotcha.
Almost without exception, if I go into a board for the first time and I ask them, here's a claim, how does it get paid? The dissension between the board is incredible.
Right. And so what should be their first step? So that's kind of the point of this video is we're trying to educate boards. So we've just had a loss. We're a board. We've just had a loss. What do we do? Call our insurance agent first, or call the insurance agent and contractor and
typically,
attorney?
we have obviously managed and self-managed associations. If it's a managed association, the management company is going to get involved.
Okay.
You now get a determination, and we always encourage people to notify us if there's a claim, even if it's not going to reach the deductible.
Okay.
Because how someone can assess there's water damage, it's involved 4 units,
Right.
We don't think it's going to reach the $10,000 deductible. Well, the remediation bill isn't going to be received for 3 weeks,
Right,
so
right.
you have no idea. Let us know,
Okay.
because you have to give the insurance company an opportunity to go and look at the claim.
Okay.
I would take a step back, Jens, and I would say it's imperative that a board understands how their insurance works, who is going to be responsible for the claim, and how the claim is going to be reported. It is typical that many boards and management companies, the first thing they do, there's a claim in a unit, they just tell the unit owner to turn it in under their policy.
Right. We see a lot of that.
Yeah, And that's pretty standard routine. Whether it's a $20,000 claim or whether it's even involving another unit,
Right.
hey, it emanated from their unit. It's nothing to do with us.
Right. And you're saying that's wrong.
And that in most cases that's wrong.
Okay. Okay. I'm going to press pause there for a second. Do you guys have any kind of little cheat sheets or
Yes.
flow charts on what to do?
That's exactly what we do.
Perfect. We are going to put that stuff at the bottom of this video, and you guys can download this stuff.
Yeah.
So great. Awesome.
You
Awesome.
use the word cheat sheet. That's
Right.
exactly what we provide.
Because I can just say
It's a
flow
summary.
chart.
It's a
Here's
sum.
what happens.
It's very
Little
simple,
summary.
two-sided summary of the association's coverage,
Perfect.
suggestions for a homeowner. In
Perfect.
theory, there should be no gaps
Right.
because that's your worst-case scenario. What we typically find, though, Jens, is that most homeowners either A, have no insurance.
Really? I thought
Yeah.
it was required. It's required under their mortgage.
No,
Unless-
the mortgagee goes. That's the whole point. The mortgagee goes to the association for the coverage because that's where all the insurance is.
Oh. Wow.
The only thing in reality the homeowner is insuring is their personal contents, unless they're responsible for the deductible.
Oh, okay. Okay.
So the
Gotcha.
mortgagee goes to the association to
Mhm.
confirm that there's coverage. Therefore, there's no obligation or there's no one forcing a unit owner to buy coverage. So we either find they don't have coverage,
Okay.
or their personal agent sells them way more coverage than is needed,
Gotcha.
not realizing that the association's policy is primary. So that
So all the homeowners should be at least having their own policy, be looking at the master policy, what's covered, and maybe they can save some money.
yes,
there. Okay.
that's exactly right.
Okay.
And typically, a good homeowner's agent would ask, what does the declaration require in terms of the association's
Right.
coverage?
Right. Okay. This is all.
Yeah.
Boy, this is
A couple of things
Yeah.
that are that we would encourage a homeowner's, the unit owner's insurance carrier to look out for.
Mhm.
Some of them, if you buy coverage, let's say you are required to buy improvements and betterments coverage under your homeowner's policy for 10,000.
Right.
That's being transferred to you by the association
Mhm.
for the deductible. They go out and buy the coverage. Then there's a little verbiage in the policy that says we will pay this unless it is a deductible that is transferred to you by the association, whereby we will only pay $1,000. That actually appears on some policies.
Oh, okay. What is that called? We should be on the lookout for that. What is that? Does it have a name, or is it just look for the fine print?
Look for the fine print, exactly.
Yes. Yeah. Okay. Okay.
Again, these are things that there needs to be a conversation.
Right. Right. So, check the declarations. Check your own insurance. Look at that cheat sheet that you're gonna give us, and we're gonna pass out. And then, what's another tip of, or watch out for overlapping coverage? What are some other things that
from a homeowner's perspective,
board or homeownership?
yes, coverage A is the dwelling.
Okay.
Contents is obviously at the owner's discretion
Right.
as what they want to cover. There's a section in a homeowner's policy called a loss assessment coverage.
Okay.
There's a lot of misinformation about what that is. People think, we're having a special assessment for the association for a construction defect.
Right.
We're going to file it under here. That's not a covered loss.
Okay.
Loss assessment is basically to fill the gap for either underinsurance or a liability situation. The
Okay.
association buys $1 million liability. Now the association gets sued for $1.5 million. The $500,000 is not covered under the association's policy, so the owner would
Okay.
have coverage for it.
Okay.
It does not typically pick up the deductible obligation that's being transferred.
Okay.
So something to look at. A couple of other things I would recommend to a homeowner: loss of use.
Right.
Loss of use is obviously if your hardwood floor needs to be replaced, you're moving to a hotel, your
Right.
dog's going into a kennel, you need meals, that would pick up that exposure.
Okay.
And if you are an owner and renting a unit,
Right.
and your tenant has to move out for a month while it's being fixed, loss of rent would be covered under that exposure as well.
Gotcha. So look for that. Okay.
So really, those are the things I would focus on.
Right.
And we're talking about very low cost.
Right.
Typical unit owners policies, I don't know, $300 to $500
A year.
Yeah.
And so, $50 a month max.
Yep.
Yeah. Well, that's great. What you know, we're engineers and architects and building envelope guys, and we get involved when there's big repairs done on the projects. And what types of insurance coverage should we be advising our clients of? We know you have your normal policy, but during this repair process, you should consider. Are there any things that we can tweak the policy during construction, or?
The key thing is, I mean, we're getting away from the homeowner now.
Right.
We're going back to the association.
Yeah, the association.
The association, depending on the scope of the project, may be required to have a builder's risk policy to cover all the additional work that's going on.
Okay.
We always counsel our clients as we know, everything is subject to a contract.
Right.
Your typical AIA contract, which is often used, has very very detrimental language in it to the association.
Oh, it does.
For
okay.
example, a contractor may be solely negligent for damaging something in the building.
Okay.
The building's insurance carrier pays for the loss. That's the first party,
Okay.
and then they would typically subrogate against the contractor.
Right.
The language in there precludes subrogation, even though the contractor was at fault.
Oh, wow. Interesting.
We just had a
Okay.
recent one where substantial roof, a re-roof was caused extensive damage,
Right.
and the association was going back against the contractor, and they said, nope, under the terms of the contract, you indemnify us, we're not responsible.
Wow.
That's very tough.
Yeah, that is tough.
So the lesson there for an association is have those contracts reviewed by an attorney and your insurance broker to make sure that,
Right.
it's reasonable.
That's a great point, because in the construction industry, AIA has typically a good contract base, but
Yes,
the
it's
way
a
it
template.
spins into the insurance coverage specifically for the association, you're saying is potentially a problem. So that's something good we both want to advise our clients to avoid problems. So that's good to know. So.
And it's amazing because typically we see a contract after it's already been signed.
Right.
Because they need an additional insured endorsement or something, and then you're like, "Wow, did you
by the
sign
way.
this? Did you consult your attorney?"
Right. Right.
Problem.
Okay. Gotcha. Okay. Well, do you see any kind of typical big mistakes that boards routinely make that we can tell our boards that they're watching now and saying, "Hey, watch out for the following"? And I know we've covered some of it, but is there anything else?
I would say something that I see is consistency. We've just said the association's policy covers all real property.
Right.
Okay? Boards change. The new board comes in. There's a $20,000 loss in a unit.
Right.
The natural instinct is to say, well, it's in the unit. It's not our responsibility.
Right.
So they tell that person to file a claim, and their insurance adjuster doesn't look at the declaration. They pay the claim.
Gotcha.
The same $20,000 loss the previous year was handled by the association, and now you've got one handled by a unit owner. If I'm a unit owner and I find that
Right.
there's been a disparity in how losses are being settled, you can see where boards expose themselves. So
Board change order, or
Yeah.
even management change order.
management
Right.
change,
Right.
exactly.
Right.
And I actually say you're better off doing it consistently wrong than being,
Back
half
and
right and half wrong. So you can see where that goes. So we do see some of that.
Okay. That's good to know.
The other thing is that I do see as a problem is very late reporting. A loss happens, we think it's small, it's manifested itself. You're in the business. We find water in dampness in different units at a later date.
Growing, yeah.
No one actually went in there and did the proper remediation. It was never reported. We get losses reported 6 months after they've occurred, and you really do compromise your coverage.
Okay, good point. And you brought up proper remediation. How much? There's a tendency to hire the low bid, and then there's a way to do it correctly. And so how much kind of damage or confusion do you see caused by using contractors that aren't properly trained in drying it out or finding it? Is it?
We don't see many of that. I mean,
okay.
I could see that happening more with a self-managed association.
Okay.
A self-managed association is just going to call Joe Schmo in the yellow pages.
Yes.
Of course, we don't have yellow pages.
Right,
But,
right.
you know, they've Googled something and they've got someone.
This,
yes.
this now.
They've got the first person to come by,
Right.
and yes, they're fixing the immediate problem, the
Right.
broken pipe,
The visual,
yes,
the visual damage.
and yet your typical contractor that's a specialist in the industry. I mean, I go out on claims, I see them using infrared,
Right, expensive tools.
very
Yeah.
expensive tools. They do an excellent job, and coupled with the adjuster, it's very important to have the adjuster there at that time, so
Correct.
they're determining what the true scope of work is. There's no questions.
Right.
Typically, 95% of the time, claims are handled very smoothly,
Oh, good.
and I don't think an association or a unit owner need to worry.
Good, good, good. Anything else as we're coming to a close today?
Couple of minor things for an association to consider. Not all policies are the same.
Right.
Some policies will cover additional management charges to have someone on site, or a construction management firm that's on site. That is an additional expense to the association to manage the claim. There are a couple of insurance companies that will pay to pack out unit owner furniture while the damage that is covered under the master policy is being taken care of. That's
Okay.
not going under the homeowner's policy, it's
Right.
going under the master policy.
And that can be a big cost.
It can be a big cost. Yes, it is covered under the homeowner's policy, but it's an added benefit.
Right.
So while most associations unfortunately focus strictly on price, they don't realize that the small print does have some differences. So
Good
definitely something to consider. Again, you know how it is. I mean, your typical board says, Duncan, you have 10 minutes to make the presentation and explain everything.
Right,
How long have
right.
we been talking
Right.
here, and we've barely
and
peeled
we've
the
just
onion?
scratched the surface. Yeah, yeah, perfect.
Yeah.
Well, Duncan, thank you so much, and everybody who's watching, we're going to have all of Duncan's information in the last screen there, and you can contact him if you have further questions. I'm sure he'd gladly answer your questions and help you with your insurance needs. And if you've stayed with us this long, you're finding value to it, and it would really be appreciated from both of us if you would share this, if you would like us in all the usual places, share our message. It just helps us spread this message to other boards who can use our help. So thanks for tuning in today, and stay tuned for the next show.